Welcome to another week of exciting mortgage and finance news. Today, we're going to talk about why interest rates should be lower. So this is an exciting topic. I know a lot of people, this is a pretty controversial, right, topic to say interest rates are going to be lower. And while I'm not immediately predicting rates will be lower, what I'm saying is based on some pretty proven data, rates are higher than they're expected to be based on the difference between the 10-year Treasury yield and the average 30-year fixed mortgage rate. So let's look at this chart right here. And this again is the spread between the 10-year Treasury and the 30-year fixed mortgage rate. And if you look at where we are currently, we have an average interest rate of 6.9%, and the 10-year is trading in a range of around 3.2%. And again, this is at the time of filming and recording this, which is a difference of about 3.7%. Now, if we look up at what the average distance has been over the course of time, we see that from 1971 to 2023, the average was 1.72. 89 to 19, 1.66. 2020 to 2023, 2.12. And even just the 2023 average was 2.78. So we're currently seeing about a 1% difference between the spread. What this would, in theory, mean is if we went from where we are currently to the 2023 average, that would mean that the average rate would go down from 6.9% to 5.9%. And if we used longer averages, which have an even steeper difference, you can see where interest rates will significantly go down if that spread starts to tighten back to normal. So if we look at over the history of time where that spread kind of became out of whack or went higher than average, those were all times of inflation. And as we've reported time and time again, we expect the inflation reading to reduce in the upcoming month. And as inflation drops, so should the 30-year fixed mortgage rate as that spread between the two inch closer together. Looking forward to next week, we get the CPI report or Consumer Price Index that will reflect the inflation for May of 2023, and we do expect a very favorable reading. Also next week, we should get the final numbers for the increase of AMI, or Area Median Income. And these are important because it directly reflects buyers' eligibility for certain loan programs. Most notably, Fannie Mae's Home Ready, Freddie Mac's Home Possible, and the previous 1% down programs that we've discussed before. This should again open the box for those people as more eligibility improves with higher AMI income limits. Those are effective June 12th. We'll keep you up to date on that and all of the relevant mortgage and finance news that you need.